in the explorers, I really like F3, like Fission 3.0. They they hit some great targets. They're drilling right now. The best place to find uranium is where there's uranium, and some of their results are some of the best results that any explorer has ever come up with. That does not mean that there's a big deposit there, and that if there is a deposit there, that deposit will be mineable. But that's the kind of thing that I like. The base load is another one. I'm missing another one. Oh, I'm sorry, I just drew a blank there.
OVX,
But Sky Harbor is well. They're so well positioned. Jordan Trimble's doing a great job there. Can Alaska, Corey Bielik, they're doing a great job too. They're drilling. They'll have some results this fall. And when these explorers are drilling, and if the news is good, in an environment where the price of uranium is going up, then that's good news. In the past, when I was speculating in these explorers, in the middle, right in the bear market, they could come out with the best news in the world, and nobody cared. I remember at one specific point in time, Denison Mines came out, I think it was in 2018, they came out with results from one of their deposits where they doubled the size of the deposit because of the results they received from drilling. And the market didn't care. So actually their market cap should have doubled because the resource doubled, but the share price went down. So that's the kind of thing that I like to invest in. And, so those are the areas that I would be putting my capital now, given my risk tolerance as well. So, it's the explorers is a tough game, the ride, it's a pretty big roller coaster ride. The rides going up are pretty a lot of fun, but the rides going down are pretty scary as well.
Yeah, you inherit a lot of risk in the process there. So, follow-up question there. How do you sort of mitigate this risk by your due diligence? How much time do you spend actually researching these companies, like on a monthly basis, or leading up to actually buying it?
I look at information related to the uranium sector and my specific companies every day. And so, when I was looking at, let's just talk the explorers in the Athabasca Basin, for example. One of the things that I realized in 2017, 2018, which was right, in the bear, in the brutal bear, was, hey, these companies, and again, there might have been maybe 15 explorers in the Athabasca Basin at that time. So I said to myself, there were so many explorers at the peak in 2007, 2008, 2011, 2012, and they got dwindled down to 45 companies. And out of those 45, there might have been 10 or 15 explorers in the Athabasca Basin. So for those companies to have survived that brutal bear period, not only did they survive, they also, a lot of them took advantage of the situation where they were able to acquire other projects. And, some of them just went into like survival mode where, just keep the lights on. So I told myself, like the level of risk here, if they survived so far, the chances of them declaring bankruptcy and me losing my investment in them or speculation money in them is pretty slim. So, and I was also thinking that when this sector turns around, and it had to at some point in time, that the rising tide would lift all boats. Even if they didn't make a discovery, that was my bet. It's a risky bet, but that was my bet. And so that's kind of how I decided to choose the different companies that I invested in at the time. I also made it a point to try to meet and talk to the different CEOs of the companies. I went to the major mining show here in Canada, which is called PDAC, in March. It's usually in Toronto in early March. And so I went there and went on the floor to visit all the booths of those uranium companies, so a lot of the CEOs I call on a regular basis, just to check up on them. Some of them I even, dropped into the offices unannounced just to see, like, is there an office here? Is there staff here? Is there really something going on? Cause anybody could put anything on a piece of paper. But, so that's kind of what I was looking at. I also wanted to make sure that, it wasn't like a lifestyle company. I wanted an exploration company. So the money that I was putting in, I wanted that to see and prove that money was going into the ground. The bet you're making is that hopefully they'll find something, which is no easy task. So if they were raising money, were they putting in place a drilling program? Were they able to execute on that plan? So that's something else that I did in my due diligence in choosing which companies to invest in on the exploration side.
Right. I mean, that's some heavy duty due diligence, actually going up to the office. But I guess since you live in Canada, how far are most of these offices from you? Like, how far is the Athabasca from you?
It's very far. So the companies don't have their office in the Athabasca Basin itself. That's where they explore. Most of the companies have offices, most of the mining companies, almost all mining companies, have offices either in Vancouver or in Toronto. Mm-hmm. So I'm from Sudbury, so Toronto is 4 hours away, and we travel to Toronto quite often. It's our largest city, so I'm in that city quite often. But when I did travel to Vancouver, I would, so several of them have their offices in Vancouver, which is where I went to meet them. Mm. And so you can't do that every day. But just to give you an example, from here to the Athabasca Basin would be like from New York to Wyoming.
Interesting.
Yeah. So, the Canada is the second largest country in the world. It's absolutely huge. So it's not an easy thing. And one of the things that I started working on this summer is some of my friends and people that I know who invested in the uranium sector. We always talked about, organizing a trip to go up to the Athabasca Basin and visit some of these projects ourselves. So I might put a little trip together next summer and just to go see the different projects.
You could probably make a trip and charge for it. I'm sure there's plenty of people on UTwit that would take you up on that offer to go down in the Athabasca with you, Terry.
Well, there's a few challenges with that. Number one is, the actual companies wouldn't be able to provide us with any information that they can't provide with other investors, two other investors at the time. So that's one of the issues with organizing a trip like that. But the other thing is to accommodate a larger group. In the Athabasca Basin, like you're talking about up northern Saskatchewan, there is infrastructure, but there's not a lot of, how could I say, accommodations, for example. Mm-hmm. The different lodges or camps that are there are used mostly especially in the summertime and fall, for people that are working on these drill rigs. So, and geologists and stuff like that are involved in the drill program. So I've spoken to a couple CEOs already to see if we could put something together for next summer. We'll see how it goes.
Yeah, definitely. So I want to kind of take us down memory lane. What was Terry Papineau investing in before uranium?
That's it. That's a good question. As I said, I was in financial planning for about a 5-6 year period of time, and I really, really enjoyed it. I started doing that part-time, as a matter of fact, and then I left teaching to do it full-time, and then it's a long story, but I ended up going back into teaching, selling my book, And at the time, I was mostly invested in mutual funds. So, and I really, developed a love for, I was always interested in financial markets, but unfortunately didn't have, the knowledge or experience or someone that I could learn from. Because I'm French Canadian, and it's not really a French Canadian thing to do. Most French Canadians, they would just put their money in the bank. And so I remember I asked my dad, and he, I asked him I had a paycheck, and I knew that I could sort of do something with that money, invest it, but I didn't know. So I said, Dad, what should I do with the money? And he said, go to the bank, they'll tell you what to do with it. So, but that was at a time too when interest rates were 20%, in the late 1970s, early 1980s. So a lot of people made a lot of money in banks, although not understanding that their purchasing power was being destroyed by inflation, which was extremely high at that point, which is why we had such high interest rates. But anyways, that's beside the point. So I always had that really keen interest in learning about the markets. And so when I got involved with financial planning, I was watching markets very keenly, just to try to see, just to get to learn and to see if I could develop or see different, sort of setups or a pattern or something developing. And, in financial planning, one of the things that I did in the 1997, 1998 period of time, gold was selling for $250 an ounce back then. And so I would look at a precious metals fund that was showing, they had to show the 1 month return, the 3 month, the 6 month, the 1 year, the 3 year, the 5 year, the 10 year, the lifetime returns. They were all in the negatives, like negative whatever, because the price of gold had gone from over $800 an ounce to $250 an ounce. So everything was down for every single period of time. And that was really appealing to me because I said, there's no way gold can stay down that long. It's going to go back up at some point in time. So I was able to kind of, educate my clients, some of my clients that were willing to listen, that, this is the kind of investment that you should be looking at instead of the shiny funds that are showing, the plus whatever percentage rate of return, because at that specific point in time when that whatever number was published, the results were really good for those periods of time. So that kind of thing. And then I also saw, I really, really, in 1996, 1997, when I started, tech was big. It was a great time to invest in tech and tech funds. But then, it just, you could tell by the end of 1998, especially 1999, that it was getting way too inflated and becoming a bubble. So I started to, say, okay, let's shift from here to there, not knowing if I would be right. And, so shift out of tech. And of course, the bubble did burst at that time, which, was something that happened. And then after that, I saw like oil, for example. I saw oil, I was looking at it, was like, $39 a barrel. And then it would go up $40 a barrel, $41 a barrel. And I like to fish, and when you fish for walleye, you like to, bounce your bait off the bottom. And it was like, I'm looking at that, I'm going, oil is bouncing off the bottom. And there's no way oil is going to stay at $39 a barrel. It's going to go up sometime. And so shifted a lot of my portfolio into oil, and that ended up being a good move. So those are the types of decisions and moves that I've been making with my portfolio. And right now I have full conviction in the uranium story.
Yeah, I can totally see it. So if I were to say you could invest in anything but uranium at this very moment in time, what would you kind of say?
Oh boy, that's such a good question, Danny, because I'm really not sure. I think that I'm really starting to show an interest in precious metals like gold and silver. Not because I think that they represent, I don't even know if they represent a good value, or, you know, like a good value proposition if they're going to go up. I'm intrigued with the value that they might store. And I just like to own precious metals like gold and silver. I just like to own some of that. That would be one thing. And I think I would also, have a bigger position in cash, to be able to see, you know, the upcoming opportunities and have some powder to be able to deploy.
Interesting. So you see a downturn in the future, or you see strong signs of a downturn potentially?
Well, I can't say that. Like, you know, there's people that are talking about recession. I really do not see a recession right now. I don't think we're in a recession right now. My wife and I, we traveled quite a bit. We were in the United States, November, December last year. We were in the United States for 3 weeks, September, October as well. We were, in the Caribbean for the winter. We're going back to the States, came back to Canada. You know, I remember in the late 70s, early 80s when we were in a recession and people were out of work. There were no jobs. There was no, you know, no job vacancies. I'm not seeing that now. I'm seeing still places where they're looking for, workers, where there are jobs available. I'm not saying that it's, you know, at some point in time, conditions are going to be so tough that, you know, people will get laid off again, and unemployment insurance, like here we have employment insurance in Canada. People, like in the recession that I remember in 1970s, early 1980s, people were unemployed. They were receiving what's called unemployment insurance in Canada. And, you know, and that ran out, and it was really tough times. I'm not seeing that right now, but I do see a lot of serious problems with inflation. I also see serious problems with the way the governments have tried to fight their way out of this inflation. I also see that with the pandemic, you know, governments just printed money and gave free money away, and we're still feeling the effects of that. And I see that at some point in time, there's going to be a reckoning. I just don't know when that's going to be. But, you know, it's just a malaise that exists in the general markets. And I do see that. It's difficult to see exactly what the outcome is going to be. But at this present point in time, I don't see a recession.
Yeah.
There might be one next year, but I don't think our economy, the Canadian economy anyways, and what I saw in the American economy last year, I don't see that right now.
I mean, honestly, it seems kind of isolated to just the managerial white collar class. That's where you're seeing most of the layoffs.
Okay.
Right. I mean, like, this is just like based off some of the things that I've heard from the likes of like Daniel DiMartino Booth. She's spoken about this very recently. So to your point there, you know, there's not much anecdotal evidence that I see either of a recession in my neck of the woods down here in the States.
And so I've been spending quite a bit of time in Toronto in the past 4 weeks, which is our major city. And I'm telling you, like, the highways are packed full of goods being transported and different service purveyors and different products. Just like it seems to me like there's a lot of economic activity going on anyways.
Yeah. I see it here too. Just kind of bring us back to the uranium fold. Would there ever be a point where you just stop buying or adding to your positions in the event that the price gets a little too ahead of itself, or that the price just runs and you just say, you know what, I'm in a hold. I'm not going to add any more positions. I'm just going to hold cash at the moment.
That it might very well be, you know. However, as I said, you know, the situation just keeps getting better and better and better. Mm-hmm. For example, okay, in 2016, 2017, 2018, 2019, 2020, 2021, like, the nuclear industry was dead. Like, there was no growth, no no hope for the nuclear industry, is in the past 2 years, that's done a complete 180. Governments, all kinds of different organizations and environmentalists, and it's, support for nuclear where you didn't see it before. So I think that, this sector will see growth, longer than what I had anticipated when I first got in 2017, 2018. So, that's what I mean when I said at the beginning that I'm going to be looking at, the macro aspect of it, the nuclear industry itself. How is that evolving? Like, are the nuclear build-outs slowing down? The promises of small modular reactors, is that really, are we executing on that, or is that just a pipe dream? Our governments and environmentalists, are they going to stay on this bandwagon, or are they going to switch back to something else? Mm-hmm. So, yeah, at some point in time, I mean, depending on what the information is and how things are developing, I might say, okay, I'm out. But I could also see myself saying, okay, I'm going to take some profit off the table, but I'm going to remain in the industry for a longer period of time. And I might also, change my investment strategy. Like there's a uranium royalty, vehicle that I'm intrigued about. Kazatomprom and Cameco, they're going to be cash cows in the future, paying dividends. And, so, I might shift my portfolio, into different areas in this sector. So it's very difficult for me to say exactly what I would do. But those are the kinds of, questions I'm asking myself with regards to how am I going to move forward.
Yeah. Especially if you look at like some of these, supply deficit charts that kind of extrapolate out into the 2030s and so forth. We really haven't seen anything in terms of supply deficits yet in 2023. These things start to widen out in the next 6 to 7 years. That's when it gets really crazy from a supply demand point of view. So I'm kind of in the same camp as you are. I think it's going to go a lot longer than a lot of people are anticipating. I know some people like Justin Hune, he said it a few times before that he expects it to be maybe like a 2 to 3 year run from here. But, in my opinion, I could see this thing playing out all the way out until like the late 2020s. What do you think?
Well, Justin also says that, I think he shares the same opinion that I have. I don't want to speak to Justin, but with regards to, I think he sees this going on longer than what he thought as well. Mm. So, you talked about the supply demand, scenario. We've been, one of the reports that a lot of people, rely on is the WNA. They had come up with a supply demand scenario, every 2 years. And I think they'll be coming out with their new scenario or updated scenario next week or the week after that. But, just to give you an example of how this sector is dynamic, there's another factor at play this year, and that's going to become a bigger factor that I hadn't even considered until last year when Russia invaded Ukraine, which is underfeeding and overfeeding. Where now, because, Western utilities are changing, where they're obtaining their different products and services, now Western friendly converters and enrichers, are getting more business, and to be able to provide the services and products that are needed, they increase their prices. But into conversion, they need to, or enrichment, that is, they need to overfeed, which is going to generate a demand that none of the models had foreseen, until early this year, late last year.
Yeah.
So it's a very dynamic sector, and again, where the fundamentals are getting better and better and better. And With regards to the past few years, there was always different roadblocks, saying, well, there's a lot of uncertainty because of, the Russian suspension agreement or this type of thing or the Section 232 or whatever. There was a whole bunch of, sort of roadblocks and uncertainties that were kind of holding the sector back. But at this present time right now, like I started out by saying, all systems are go right now. I think there's a couple things holding us back. If there's a big market meltdown, general market meltdown, which we sometimes see in the fall, October or something like that, that would not be helpful, in the short term anyways. And a nuclear, incident, that would definitely hurt us. But mid to long term, it's still looking really, really good.
Yeah. Yeah. In terms of analysis, when you're looking at these companies, when you're looking at the sector as a whole, do you leverage like any technical analysis, or do you stick to fundamental analysis, or otherwise?
When you talk about technical, are you talking about looking at charts or?
Yeah, looking at charts and patterns and charts.
No, I do not. No, I just look at, as I said, like for the explorers, for example, where were they at when I had money to deploy? What was their market cap? What was their share count? Like ISO was just such a great, it still is. It's the gift that keeps on giving, because, over 50% of the company was held by NextGen, and they had a very, low share count. So whatever shares were traded on the stock market, there was not a lot to go around. So when people wanted to place a bid on the share, the bid went up pretty rapidly. And if you look at ISO's performance in the last month, it's been pretty good. It's been actually stellar. I think they went up 45% in August alone. So, that's the kind of thing that I would look at. I did not I actually don't know how to do technical analysis. I'm sort of ashamed, not ashamed, but, to say.
Yeah, well, I do it sometimes on the channel, so you're always welcome to.
Well, I watch technical analysis. I watch technical analysis, but I don't do it myself.
Yeah, fair enough. A lot of well-known and highly esteemed investors don't dabble in technical analysis, but I'm a numbers guy and I like to look at patterns, so just a natural. It's to me, it's kind of fun, but I totally get it there.
And I like what you do. Like I like watching what you do. There's Andy finding value. He looks at all kinds of different ratios, which is interesting to me. And you do the same thing. So, but I mean, I think we're all singing the same freaking song.
Yeah.
This is a great setup.
Yeah, totally agreed. So Terry, we're heading up an hour now. I want to give you a chance to kind of leave the audience with some closing thoughts, and also where can they find you as well?
Well, thanks. People have reached out to me on X or Twitter, a direct message, but for some reason I tried to open my Twitter account with my computer, and it said that my Twitter account is I've been booted out of X or Twitter. I don't know why. I did criticize Elon Musk a couple of weeks ago, his new X platform. So I'm wondering if that's the reason why. But
I can still access engineers.
Yeah, I can still access it on my phone. So direct message. But the closing message is, that the sentiment has been absolutely rotten in the sector since I would say May of 2022. It's been a really bad ride down. We peaked in April 2022, and then it's been downhill ever since, except for the last 2 months, especially the last month. So sentiment has been absolutely horrible. And a lot of people entered the sector in the fall of 2021 when the sector was starting to get red hot. So, the timing was not good for a lot of these people, and a lot of them are down big time. So a lot of them got burnt, and they're just disenchanted with the sector. So I understand, but and they're tired of hearing people like myself and Justin and Rick Rule and Andy and you, a whole bunch of people saying, the setup is pretty good. But I'm fully convinced of that. And I think that, we're going to have our day.
Yeah, I think we should actually start selling once those people start singing the praises of uranium.
Yeah,
What would you
that's a good point.
what would you actually recommend to I guess like a newer uranium investor? Would you, or someone that wants to kind of go off further into the risk curve like yourself, into the explorers? What are some best practices that you kind of leave them with?
Well, we have a lot more products today in the uranium sector than we did when I started looking at it in 2016. In 2016, I don't think that URNM had been formed. No, it hadn't. So there was no uranium ETF at the time. There were two physical uranium funds, with Uranium Participation Corp and Yellowcake. And the uranium royalty product had not been formed. So, you had a vehicle to buy the actual physical commodity itself. But other than that, you had to basically start buying the equities themselves. So if someone wants to start and is looking more of an easier, smoother entry point, then URNM would be the way to go. And Sprott also came out with a uranium junior miners, which is URNJ. So if you want a little bit more risk, then there's URNJ. And then you have Sprott Physical Uranium Trust Split, which now gives you access to the physical if that's the way you want to play it. And there's a uranium royalty vehicle, which is a different way to play it. And then you have the different equities themselves, the explorers, the developers, and the producers. So there's a variety of vehicles that someone can invest in now, and which is less risky than building the type of portfolio that I have or buying equities themselves. So I would suggest that someone who's interested take a look at that.
Yeah, it's never been easier to be a uranium investor, more so today than at any other point in time. So thanks again for coming on, Terry. If you guys enjoyed this content, if you enjoyed this interview, be sure to like it. Be sure to subscribe to the channel if you haven't already. Comment down below whether or not you agree with some of the things that we said. And I will see you in the next episode. Bye, y'all.